When the public confidence in fiat money is lost, governments always turn to gold, 100% of the time. Gold and silver maintain your purchasing power. By design, dollars, euros, yen do not.
Lynette Zang explores the significance of gold in times of economic uncertainty. She discusses how governments turn to gold when public confidence in fiat money is lost and why it maintains purchasing power, unlike traditional currencies. She also talks about the potential risks of holding dollars, euros, or yen, and learns about the strategy of hyperinflation governments use to address unpayable debt.
No, I'm sorry, it's at the end. It's too late. There was an opportunity. And for those countries, because I have a lot of people that say China's going to back their currency with gold or Russia's going to back their currency with gold. And ultimately, yes, because that's how they're going to regain the confidence. But they have to burn off all that unpayable, not just unsustainable, the unpayable debt. They have to burn that off. And the way that governments, especially advanced governments, do that is by hyperinflating the currency so that you're repaying that debt with currency that has no value. Guess what? Individuals can also use that same strategy, can't they? So just by holding your purchasing power value in this teeny little package enables you to protect yourself, your wealth, retain your freedom, retain your choices. The U.S. actually tried to give back the world reserve currency status then. And what that means, just really simply, is if you are a government or an individual or corporation going outside of your borders to buy that oil or back in the day lumber, anything, you had no other choice but to use U.S. dollars.
Lynette Zang delves into the demise of the petrodollar and its implications for the global economy. She explains the concept of the world reserve currency status and how it has benefited the US since the 70s. Lynette Zang discovers the potential shift in power from the West to the East if countries like Saudi Arabia and Russia accept gold or other currencies for oil transactions.
It's Saudi Arabia and the oil-producing nations, OPEC plus. Who's that plus? Oh, Russia. Gee, if they now accept gold, rubles, yuan, any currency to buy, that means the petrodollar is dead. And that's the only reason that the U.S. retained its status since the 70s. So there are too many things, you're right, on a global stage. We have really used up the confidence of the world because we've just been exporting inflation. And if you go back and you listen to some of the tapes like de Gaulle was saying that the U.S. was abusing its privilege. Yes, we've abused our privilege a lot. And now all those dollars, that fake market for dollars, when that goes away, then all those dollars come back here. And the IMF created what's called a substitution fund, where anybody, any government, or probably also corporation in the world can deposit their dollar-denominated assets or instruments, and they would be converted into SDR-denominated assets or instruments. So my guess is that's going to be the next world reserve currency, but that doesn't look very good for the U.S.
Lynette Zang explores the rise of de-dollarization and its impact on the global financial system. She discusses the establishment of battle lines and the arrogance of the US in using its financial dominance to influence other countries. Lynette Zang discovers how the IMF's substitution fund plays a role in this process and how the alliance against the US is gaining strength. Let's find out how the power dynamics between the West and the East are shifting and what it means for the future of the global economy.
Battle lines have been established. And this has been coming. We've been so arrogant in this country to export and show people that if you don't do what we want, we cut you out of the global financial system. This is not a surprise to me because this discussion and building out that infrastructure to be able to accommodate complete de-dollarization, even over at the IMF, with their substitution fund, they already set up the de-dollarization position on a global basis. Particularly, the IMF is part of this. And that is every Treasury Secretary and every central bank chief, almost, not 100%, but pretty close to 100%. So, yeah, I think that alliance is strong. It's alive. It's more surveillance oriented. And there is not one doubt in my mind, but that the U.S. is losing that advantage, because that advantage means that the whole world had to hold dollars. They don't have to hold dollars to buy oil. They can hold yuan. It shifts the power from the West to the East. It's like handing off the baton. But that can happen in a heartbeat, especially through the substitution fund. So those other countries, when they talk about that their membership will expand, countries typically want to go to strength. And I don't think the U.S. is showing a lot of strength. And I think that we're also forcing other countries whose currencies are pegged to the dollar into positions that they can't support.
Lynette Zang delves into the challenges and opportunities of resetting the global economy. She explores the impact of unsustainable levels of debt in various countries and the necessity of burning off debt before introducing new currencies. Let's understand the significance of commodities and gold in backing a currency and how it can fix debt issues.
This is a global issue. So the whole globe is resetting. Now, when you reset a system, then you're going to have countries that are going to step into that new position in a stronger position of power. Who has the most debt? Because all of that debt has to be burned off before they can put a new currency out there. Because as soon as you put those commodities and gold in to back a currency, then that's going to fix the debt, wherever that happens to be. And I don't care if you're looking at China, or you're looking at Russia, or you're looking at the US, or anywhere else. These debt levels, not that they're not sustainable, they're not payable. What supports all of these global currencies is the full faith and credit of the respective governments, and they've used that piece up. So the way that I can see it and the way that I reconcile it is this isn't just a U.S. issue. This is a global issue. And in order to push the agenda, they need a big enough crisis to get people just to follow along.